Welcome to this video on how to circumvent the interest rates and buy a home now. I'm Mickey Booz with the Mick and Tina team at Coldwell Banker Realty Global Luxury in Encinitas, California. Today I want to introduce a favorite lender of ours who has an excellent performance track record. He's exceptionally market competitive and gets things done with enthusiasm and efficiency. With Guaranteed Rate Affinity, let's meet Rob Corey. Rob, welcome. Great for you to be here.
Good to be here.
Thanks, I appreciate that. So what's actually going on with interest rates right now?
Interest rates have gone up the last few months, like we've all seen, and the reason is inflation's up, and they're trying to get that under control.
So is that what the feds feel is the one and only way to do that, is to raise the rates?
I don't know if it's the one and only way, but it seems to be the major factor in rates going up.
So unfortunately, it affects a lot of businesses, including real estate, in order to get inflation under control, but I guess that's the mission, right?
That's the plan.
Okay. So let's talk about 4 different ways that buyers can work with the interest rates to try to get their rates reasonable so they can afford a house payment.
Okay, one way would be an adjustable rate mortgage, where a rate's fixed for a period of 5, 7, or 10 years, and then it turns into an adjustable after that.
So an adjustable rate mortgage makes the mortgage more affordable initially, but it also gives the buyer a chance to let the rates come down so that they can refinance. Is that right?
Correct. Or someone that might have a plan that they're only going to be in the home for 5 or 7 years and they're not going to be there longer, so maybe they want to go that route even because of that.
Are those rates actually lower than a conventional rate?
They are lower than a conventional rate, anywhere from 0.5 to a full %.
So Rob, what's another buyer option?
The most common way is a buy down. We call them 2-1 buy downs or permanent buy downs, and it's where you pay a fee basically to get a lower rate, whether the buyer pays it or the seller maybe pays it as a concession.
So how does that actually work?
Yeah, the way it works is basically you pay a fee, you being the buyer, or you ask the seller for a seller concession to pay that fee to get the interest rate lower.
So if the seller was going to drop the price of their house and do a price reduction, sometimes they might drop it as much as $50,000. How much does a typical buy down cost?
I mean, you can spend, I'm doing one now, they're spending $22,000 to get the rate down about 0.5%. And it's a big difference when you're talking about a loan amount of $900,000.
Right, so you're dropping it a chunk every single month.
Exactly.
What's a third buyer option?
Another way is an interest-only loan. And an interest-only loan it's a little below a conventional rate, and it's interest-only rather than principal and interest, so your payment's lower.
And is that rate actually lower than a conventional loan?
That rate's a little bit lower, but the best thing about that is cash flow. It gives you a lower payment, a much lower payment than a fully amortized loan, because you're just paying interest instead of principal and interest.
So Rob, what's another buyer option?
Another way is a VA loan. VA loans are 100% financing, there's no mortgage insurance, and it's one of the best loans out there.
So the big advantage with that is you can actually go with a 0 down payment.
You can get 100% financing and there's no mortgage insurance.
So thanks very much for being with us. Really appreciate you being here. It's great to talk to you, and I hope you can come back soon.
I hope so. Thanks, Mickey.
Awesome. If you love that information, please hit the like button and don't forget to subscribe to our channel. We hope you enjoyed that, and we hope to see you again soon on our next informational video.